Wake up, America! Owning zero point 0.1 Bitcoin might soon eclipse owning a house. If that sounds like pure science fiction, fasten your seatbelts. This is not some random internet gossip. People all across the United States, from real estate enthusiasts to tech-savvy millennials, are starting to whisper that a fraction of a digital coin could be tomorrow's ticket to wealth and security. Today, we are peeling back the layers of this surprising shift. How can zero point 0.1 Bitcoin, valued at around $10,679 not long ago, be on track to rival a suburban home, one of the most enduring symbols of the American dream? Stay with me, because we are about to uncover why top visionaries like Changpeng Zhao from Binance, Michael Saylor from MicroStrategy, and William J. Pulte from the Federal Housing Finance Agency are championing Bitcoin as a game changer, and what that could mean for our collective future. We will delve into the twists and turns of this new financial narrative. Is Bitcoin really redefining the meaning of homeownership? Could a small stake, like 0.1 Bitcoin, ensure the kind of stability that used to be symbolized by a house with a picket fence? In this script, we will address these riveting questions, explore the policy shift that now allows Bitcoin to be counted as an asset on U.S. mortgage applications, and investigate what this furious wave of digital adoption might unlock for everyday people. By the end, even the biggest skeptics might wonder if a fraction of Bitcoin is not just another passing fad, but a pivot of historic magnitude. Picture the classic American dream: a stable 9-to-5 job, 2 cars in the driveway, and a house you can proudly call your own. For decades, this was more than just an aspiration. It was a cultural blueprint for success. But times are changing at breakneck speed. Many younger Americans, weighed down by rising property prices and ballooning student debt, cannot so easily scoop up the suburban home their parents treasured. And while house prices keep climbing in cities from coast to coast, Bitcoin is steadily gaining legitimacy. The raw fact is hard to ignore. Bitcoin, once written off as niche or even silly, has caught the attention of major financial institutions. Exchange-traded funds for Bitcoin and Ethereum are no longer a fringe idea. Prominent players in the finance world are racing to build regulatory frameworks around digital currencies. And now, a major shift is happening in real estate finance that could shatter our old definitions of ownership. Binance's founder and former CEO, Changpeng Zhao, often called CZ, set the internet on fire when he declared that owning 0.1 Bitcoin might one day outvalue the average house in the United States. At first glance, that statement feels outlandish. After all, a house has been the bedrock of intergenerational wealth in this country for more than half a century. But consider what we have seen over the last decade. Bitcoin prices climbing from a fraction of a dollar to tens of thousands of dollars. Adoption by major corporations, and, most recently, acceptance into official mortgage qualification metrics. William J. Pulte, director of the Federal Housing Finance Agency, is championing a policy that recognizes crypto holdings as part of an applicant's financial portfolio. In plain English, that means if you apply for a mortgage, you can factor in your Bitcoin stash the same way you might present your retirement savings account or stock portfolio. This is not mere talk. In fact, rumor has it that Pulte issued a directive to big housing finance entities, think Fannie Mae and Freddie Mac, requesting regulatory updates. The aim is to pave the way for crypto acceptance as a routine aspect of mortgage evaluation. According to reports, they had a productive meeting and have already given the green light for these changes. That lightning-fast action is sending shockwaves through both the real estate and crypto communities. Suddenly, digital currencies feel more legitimate, more intertwined with our everyday finance, and potentially more stable as an investment choice. If you are finding this surprisingly intriguing, please consider giving a little gesture of support. Hit that like button or share this story with your friends. You never know who might be on the cusp of rethinking just how they plan for their future. Now, if Bitcoin is inching its way into the sanctified space of mortgages, what does that mean for everyday folks? Let's face it, across the United States, the cost of living in major metropolitan areas has soared to unimaginable heights. Mortgage interest rates, though fluctuating, can still be daunting. Student debt is at record levels, delaying marriage, childbirth, and major purchases like vehicles or homes for millions of Americans. Yet here comes a platform like Bitcoin, decentralized and unbounded by country lines, stepping forward as a potential solution. Imagine turning the conventional mortgage application on its head. Without a bulging savings account or a high-paying corporate job, but possessing a modest chunk of Bitcoin, you could now credibly stand before a loan officer, demonstrating that your digital assets hold real-world value. That is groundbreaking on multiple levels. Of course, not everyone is comfortable with the volatility of cryptocurrencies. The hallmark of Bitcoin is volatility, price fluctuations that can be drastic in short periods. Skeptics ask, if I rely on Bitcoin for my mortgage application, what happens if the price suddenly tanks? That question is fair. However, Michael Saylor, the executive chair at MicroStrategy, has spent several years advocating for Bitcoin's long-term store of value potential, comparing it to digital gold. He posits that while short-term swings are inevitable, the broader trajectory points to a significant increase in value over time. MicroStrategy's own foray into Bitcoin is instructive. The company has famously converted large percentages of its reserves into Bitcoin, signifying an unshakable confidence in the crypto's long game. Crucially, Saylor's conviction is resonating with more than just big corporations. Everyday investors who missed the opportunity to buy houses at lower prices a decade ago might see Bitcoin as a second shot at building equity. The U.S. housing market, especially in popular urban hubs, often feels inaccessible, but Bitcoin, with fractional ownership, can be purchased in small increments. No need for a large down payment to get started. The ease of getting your hands on even 0.1 Bitcoin might be an appealing path to wealth building, especially for millennials and younger adults. Let's talk about the notion of becoming a whole coiner. Jeff Park, a portfolio manager at Bitwise, calls it the modern rite of passage among digital natives, people for whom the line between the physical and digital worlds is becoming increasingly blurred. One Bitcoin is no longer just a random crypto coin. Becoming a whole coiner can feel like you have staked out your digital estate in a frontier that is quickly scaling the heights of global finance. For those who cannot imagine buying a house in this economy, hitting the milestone of one full Bitcoin feels like a personal triumph. It serves as a hedge against inflation, a potential generational asset, and, as of now, even a recognized piece of collateral in mortgage applications. That last point is monumental. Think about it. If you wanted to buy a house in, say, 2005, you trudged to the bank with a mountain of paperwork, pay stubs, proof of employment, and more. Fast forward to the near future. You might be able to open your crypto wallet, show a statement verifying your Bitcoin holdings, and that alone could boost your eligibility. The very idea may feel revolutionary. It is reminiscent of the old days when gold bars or precious metals were used as proof of wealth. Yet now we have a digital asset that transcends borders, immune, at least in principle, to the manipulations of a single government. No wonder big names like Changpeng Zhao and Michael Saylor are proclaiming an entirely new vision for the American dream. But hold on, are we merely hyping up a bubble? Look back at the 2008 financial crisis, when the housing market collapsed and dragged the global economy down with it. That era showed us that real estate is not an unassailable fortress. Bitcoin, by contrast, might present new forms of risk, but it also offers new forms of opportunity. As Pulte and other officials integrate crypto assets into formal housing policy, they must also consider guidelines, risk metrics, and consumer protections. That means more detailed frameworks that measure price volatility, appropriate loan-to-value ratios, and reliability of crypto custody solutions. Meetings are reportedly underway, and the outcome will likely chart the course for a generation. Some cynics argue that Bitcoin's intangible nature makes it a questionable bet. Yet we are in a world where intangible digital services, from ride-hailing apps to streaming platforms, are the norm. We do not own the servers that host our favorite shows, but we gladly pay monthly subscription fees. The intangible argument increasingly falls flat when we realize we are already living in a digital-first economy. Besides, many people already trust digital banking, credit cards, and online payment gateways with their life savings. Bitcoin is arguably just the next iteration of that evolution. Even more intriguing, as Bitcoin's supply is capped at 21 million coins total, scarcity is baked into its DNA. By contrast, the supply of houses, while limited, has historically expanded, especially with new construction. Could that fundamental scarcity trait be the reason behind CZ's jaw-dropping prediction that 0.1 Bitcoin might someday be worth more than a typical American home? We also have anecdotal evidence that the real estate market is growing comfortable with Bitcoin. Some realtors now accept Bitcoin for down payments. A user recently shared how, when buying a house, they provided a digital portfolio summary reflecting their crypto holdings. While traditional banks balked at the document as proof of funds, the real estate agents dealing in cash transactions actually accepted it. This kind of real-world scenario, though still uncommon, might be the leading edge of a new normal. By the time your younger siblings or cousins are ready to buy a home, you might see the mortgage process revolve around digital assets as much as around a standard checking or savings account. Let's dig a bit deeper into the philosophical side. The house has long symbolized stability, permanence, and belonging. For many Americans, it represents a legacy that can be passed down, a tangible testament to years of sacrifice. Bitcoin, on the other hand, can feel ephemeral, just numbers on a mobile wallet or exchange account. Yet, younger generations are more attuned to the intangibles of the digital world. They grew up with the internet, social media, and an economy that moves at the speed of a click. In that context, a document that proves ownership of a scarce digital coin is not necessarily less valuable than a document that proves ownership of a house. The question is whether that locked-in scarcity, that bulletproof trust in the blockchain ledger, might eventually overshadow the perceived security of real estate in a city subject to economic booms and busts. In the face of all this forward-looking optimism, you might ask, what if the bubble bursts? Bitcoin has had multiple boom and bust cycles throughout its short existence. Regulatory crackdowns in certain countries have also rattled investor confidence at times. Where does that leave the dream of a Bitcoin-backed mortgage application? This is precisely where transparency and robust risk modeling enter the picture. Analysts are working on frameworks to evaluate the volatility risk of holding Bitcoin as collateral. Michael Saylor and the MicroStrategy team have hammered out proposals for sophisticated credit risk analyses that map Bitcoin's price history to probabilities of drawdown over specific time horizons. The idea is to replicate the logic of a bank's risk-based capital requirements, so that a mortgage lender can ensure they are not taking an undue gamble by accepting Bitcoin as part of an applicant's portfolio. Then there is the broader cultural shift already underway. People want more financial freedom, more ways to break out of the standard 9-to-5 rat race, and more control over their money without the heavy hand of intermediaries. That is exactly why decentralized finance is blossoming. The notion that one can move money, invest, or lend without needing a large bank or broker resonates deeply with this desire for autonomy. Bitcoin, as the flagship of decentralized assets, hits those notes perfectly. By bridging the gap between the old system, real estate, mortgages, and regulated bodies like Fannie Mae, and the new frontier, crypto, we might be witnessing a moment in history that future generations will look back on as the turning point when intangible assets gained parity with tangible ones in everyday finance. Of course, that does not mean you should rush out, liquidate all your funds, and plow them into crypto. As with any investment, it pays to do your research and stick to risk levels you can handle. However, seeing the Federal Housing Finance Agency get on board with Bitcoin is a significant step, and not just for folks who already hold crypto. It signals to the broader market that digital assets are becoming an accepted part of the financial mainstream, no longer lurking on the outskirts of speculation. If you are as fascinated by this development as I am, then consider subscribing or staying tuned, because we will keep exploring all the angles to this story, what it might mean for financial independence, generational wealth, and the entire notion of the American dream. Meanwhile, the conversation about property rights is shifting. Some wonder, if I become a whole coiner, is that akin to owning a slice of the world's first global currency? Could I pass that down to my children just as easily as a house? The question might sound utopian, but the infrastructure is already falling into place. Wallets, cold storage devices, and inheritance planning services are evolving to ensure that Bitcoin can be passed on securely. That includes measures that replicate the legal clarity we enjoy in real estate. So, if you are purchasing Bitcoin now, you may be planting seeds that your future family will harvest decades down the line. At the same time, conversations abound about the psychology of real estate ownership. Traditionalists argue that a house is more than an investment. It is a home, a place where you can grow old, raise a family, and create memories. Yet in a world of high mobility and remote work, many younger people are less interested in settling down in one physical location for decades. For them, digital assets that can be accessed anywhere in the world feel more like a symbol of freedom. Could this generational shift be why so many are eager to brand Bitcoin as the new American dream, unconfined to white picket fences or backyard barbecues, but living in the borderless digital realm? In addition, we have not even touched on the potential for innovation on top of Bitcoin, such as Layer 2 solutions, lending protocols, and micro-lending strategies. If the policy shifts continue and mainstream adoption marches forward, you might soon see an era where people utilize a fraction of their Bitcoin holdings as collateral, borrow funds to make improvements on a real house, or even tokenize the equity in their home for others to invest in it. The lines between tangible property and digital assurance might blur completely, creating a more fluid financial ecosystem, where old inefficiencies are replaced by transparent, instantaneous transactions. That is a dream that could have profound implications for how we handle everything from wealth building to retirement planning. Let us not underestimate the pushback that might come along. Banks that have built entire business models around traditional mortgages could resist these changes, at least initially. Regulators, who often move more slowly than technology demands, could hamper adoption with strict capital requirements. And not every American is on the same page. Some still see Bitcoin as either a passing craze or simply too risky. Yet at the same time, major enterprise players, from global banks to tech conglomerates, are forging ahead with crypto-friendly platforms. The unstoppable momentum suggests that while the old guard might grumble, the gate to mainstream adoption is opening. That is why pundits believe it is not a question of if, but when Bitcoin's presence in real estate financing will become standard. Younger generations, battered by the unavailability of affordable homes and deeply familiar with digital technology, are likely to warm up to the idea faster. As the economy evolves, new forms of wealth creation rise to the top. We are seeing that shift happen right now, in real time. So, if you have been enthralled by this confluence of real estate, finance, and digital innovation, feel free to tap that subscribe button so you do not miss our future deep dives into how these trends continue to unfold. And so, we come full circle. The house is the pinnacle of the American dream, going head-to-head with 0.1 Bitcoin. The conversation might have seemed ludicrous a few years ago, yet here we are, with influential figures like Changpeng Zhao and Michael Saylor, giving voice to the possibility that one day, that sliver of digital coin might outstrip the value of a traditional home. Pulte's proactive stance at the Federal Housing Finance Agency is pushing the boundaries further, potentially opening doors for a fusion of old and new finance that redefines how we measure stability and success. For some, the goal will remain owning a home, complete with a sunny porch and a warm community. For others, especially among younger generations, intangible property might very well become the gold standard. Above all, this is a reminder that our definitions of wealth, stability, and aspiration are not set in stone. They shift and adapt with historical forces, technological breakthroughs, and cultural evolutions. Today, we stand at one of those crossroads, debating whether a digital coin can command the same sense of pride and security as a sturdy house. No matter which side of the debate you fall on, it is undeniable that Bitcoin's role in housing finance is more than a passing notion. It is a serious contender for shaping the financial journeys of millions. So, keep your eyes peeled and your mind open, because the American dream is poised to take on an entirely new form in the decades ahead.